Hello, welcome! Today we'll be talking about 10 common investing mistakes that can put a huge dent on your investing goals. So the first investing mistake you can make is waiting too long to start investing or not investing at all. So a lot of people delay investing either because they feel like they have so many financial obligations now, or they don't have that much money, or maybe they feel like they don't have the knowledge that you need to begin investing. But actually, this is the biggest mistake that you can make. The good news is that with so many offerings and so many apps, just about anyone can begin investing, and it doesn't matter how much money you have. So if you're feeling a little bit confused about where to begin, you can try starting out with an index strategy, or maybe you can sign up with a robo-advisor. All these are easy ways to start investing. The second investing mistake that you can make is thinking that you need to beat the market in order to be successful. You know, it's nice to brag that you beat the market, but actually that is not what investing success is about. It's more about whether you are investing in a way that you're able to meet your long-term goals. You actually don't have to beat the market in order to be successful at investing. You just have to make sure that your portfolio is growing and that you will have what you need in the future. The third investing mistake that you can make is to follow the crowd. And what I mean by this is that the majority of people only hear about an investment when it's doing well. You know what I'm talking about, right? Like certain stocks like double or triple in value, and then the media just cover them like so much and tell you, oh my God, this is the stock that you should be buying. Look at how much it's tripled or like doubled in value. Unfortunately, by the time the media gets involved about which shares are rising, it usually means that that stock has reached its peak. Typically by this point, the investment is overvalued by then because media coverage always comes late in the game. So make sure that you don't follow the crowd and buy what everyone else is buying. So the fourth mistake you can make is to pay too much in fees and commission. Fees won't make or break your portfolio, but they'll put a dent in the long-term gains of your portfolio. Typically, the more you pay in fees, the less you will have in the long term. So make sure you look for brokerages that charge like very low fees. Actually a lot of brokerages don't charge any fees at all these days. And if you use an investment manager, then that manager should provide large enough returns that make up for whatever fees that they are charging. So just always make sure that you are paying attention to the fees that you are paying for your investments. The fifth mistake that you can make is trying to be a market timing genius. Let me tell you this, it is impossible to predict when a market will reach its peak or when it will bottom out. If you could do that, you'll probably be making a lot of money. There's just so much day-to-day variability that making such a guess is nearly impossible. Honestly, you're better off just investing based on your regular schedule and not moving around your investments too much. The sixth mistake you can make is to buy or sell based on emotions. It's so easy to get caught up in the excitement of a new investment and to buy because of the hype that a certain investment is getting. The downside about this is that it can lead you to invest in an asset without you doing due diligence or actually doing a lot of research. The flip side of this is selling based on an emotion. So when the market is down and then you panic and then just decide to sell all of your investments. So always remember that both buying and selling investments require a lot of thought. So before you buy or sell anything, make sure you are making decisions based on a plan and some logic and not based on emotions. So the seventh mistake you can make is to use money that you can't afford to risk. Never put yourself in a high pressure situation where you are putting money on the line that you will need for other reasons. So generally, you'll be more successful at investing if your decisions are not based off of negative emotions. On the other hand, when you invest with money you can afford to risk, you'll be surprised at how calm you will be and how much better you will be at making good decisions. The eighth mistake that you can make is to not review your investments regularly. And what I mean by this is to rebalance your portfolio. So we've talked about diversifying your portfolio, and what usually happens is that every year one investment will do better than another. So let's say, for example, you maintain a 50-50 split between two different investments, and at the beginning of the year, there is $50,000 in each. However, during the year, the first investment goes up by 20% and the second investment stays the same. At this point, what you will have is that the first investment will be $60,000, but the second investment will still be $50,000. As you can see, if the first investment keeps on going up, you'll probably be way off track. So what you will do in this situation is to check on your investments regularly and adjust your contributions just so that you're able to maintain the balance that you want. The 9th investing mistake that you can make is to be driven by impatience. Always remember that when you're buying stocks, you're buying shares in businesses, and usually businesses act very slow. They're probably slower than you might like. So when management comes up with a new strategy, it might take many months or even years before you can see the rewards of that strategy. So basically, don't buy shares and immediately expect those shares to act in your best interest. So make sure to control your mindset and keep an optimistic view of your investments. And finally, the 10th investment mistake that you can make is to not know the true performance of your investment. I mean, it is always good when some of your investments are doing well, but that doesn't mean that your whole portfolio is doing well overall. What matters is that you know how everything is doing and that you're keeping everything in balance. Also, don't forget that inflation is a real thing, so always make sure that you account for inflation when you're looking at your portfolio's performance. So now that you know what 10 mistakes to avoid, hopefully you'll have a much better time investing. And that, my friends, is the tea of the day. Cheers!